Hello everybody, it's Shaf Rasul here. It's Thursday afternoon, which means it's time for another Ask Shaf. Today's Ask Shaf is about banks, and when I refer to banks in today's videos, I'm talking about all purveyors of loan capital. In 2010, I was invited by Dr. Vince Cable, the Secretary of State for Business, to join an advisory panel called the Entrepreneurs Panel. The Entrepreneurs Panel was a group of business leaders who were advising the government on how the government could encourage enterprise within the UK. At the very first meeting I went to, one of the issues we touched on was banking, and it became very apparent to me quite quickly that the business secretary wasn't aware of what was happening at grassroots levels when it came to access to funds for SMEs. So the business secretary appointed myself, James Caan and Jan Fletcher to speak to CEOs of banks, to speak to business leaders and SMEs and report back to him on what was actually happening in the business world in relation to having access to funding, relationships with banks, etc. As you're no doubt aware, I write a weekly business column for the Scottish edition of the Sun newspaper. I decided that I would publish in my column, and the links below if you want to have a look at the actual column, that I would like to speak to readers to understand their relationships with banks. And a number of readers came forward, and I met them all for coffee, etc. Now, there was one meeting that I had which resulted in me writing a blog. Okay, so I spoke to the person that I had the meeting with, and he would prefer if I didn't name him in this video or nor name his business. But the background to it is they ran a small family business. During the recession, they'd run out of cash. The number of orders they received had diminished considerably, and they finally managed to receive a large order. They had hit their overdraft limit and they needed £20,000, and the bank just wasn't playing ball. So I met this chap and I explained to him how banks worked and why he was a bad credit risk, and we discussed alternative sources of finance. After I'd finished my meeting, I wrote a blog about essentially the facts that had come out in the meeting, and I addressed how banks operate and alternative sources of finance. Now, you've got to remember, at that time, we were in a very toxic environment. Banks had just been bailed out for billions of pounds. RBS had its own problems because it was getting slated in the press for its treatment of customers in its GRG department. So that's the backdrop to what was going on at the time. If you want to read my actual blog, please have a look at the comment section below and you'll see the link to the blog. Now, I need you to do me a little favour. If you like my video, please hit the like button. If you didn't like it, leave me a comment as to why you didn't like it. And the final thing I want to remind you of is I've just set up a YouTube channel, and it'd be great if you could subscribe to it. The link for the YouTube channel is below, and I'm going to be doing some exclusive content for YouTube, which I think you're going to love. And I'll see you next week.
A banker is a fellow who lends you his umbrella when the sun is shining, but wants it back the minute it starts to rain. Mark Twain apparently said this, and small business owners and startups will know exactly what he means. It's a vicious circle. You need money to fund your startup or grow, but the bank is reluctant to lend you it, so you struggle. Well, let's look at it for a moment from the bank's point of view. Remember the recession of 2009? Banks, which had to be bailed out by the taxpayer, yes, you and I, to the tune of 136 billion, were badly bitten. They are lending again, but with Brexit no closer to being resolved, they are more guarded than pre-2009. We all know about loan sharks and how they prey on the vulnerable. Imagine someone has offered you £10, but they want you to pay back £20 by the end of the week. Bad idea, right? But you are broke. You'll be getting £121 in benefits in the meantime, and your kids haven't eaten properly. Still not interested? That's how the loan shark, the lender of last resort in poverty-stricken housing estates, makes money, and lots of it. Purveyors of loan capital are all like that. But in the business world, they tend to be better dressed and less physically threatening. But they are still smarting from the recession. In an ideal world, they would want customers to repair that damaged balance sheet. The banks tailor interest charges to protect themselves against risk of default. A borrower who's a startup or in a difficult situation is perceived to be a higher risk, so will face higher charges. Say you run a huge conglomerate and need $250 million. Banks will wine and dine you to get your business at 1%. Say you need $20,000 to buy some raw materials to manufacture an order. You're looking at 5%. Plus, they'll want security in the form of a personal guarantee which could put your home at risk. At least they're not asking for you to leave your kids or pets with them. Of course, you can avoid banks altogether, as you don't need $250 million like a high-flying friend. Use an interest-free credit card to pay for some of your raw materials. If you can't pay it off at the end of the interest-free period, transfer the debt to another interest-free card, but always remember to keep an eye on the end of the interest-free period. Crowdfunding is turning lending on its head. Small amounts of money are invested by a large number of people, usually on an online platform. It's not without risk, but entrepreneurs and investors can bypass banks completely. Consider factoring. This is where a company sells its receivables at a discount for a lump cash sum. It works well for companies with poor credit ratings or manufacturing companies who must fulfill orders a long time before they get paid. The most popular way of raising funding for a business is through your friends or family. Tips from Shaf. If you are borrowing money from friends or family, you need to treat them like any other lender. Supply a business plan, including an evidence-based assessment of when they will be getting repaid. Draw up a formal loan agreement and pay them a commercial interest rate. Highlight and emphasise the risks. Be bluntly honest and reiterate they could lose their money. It's better to be upfront than having an awkward conversation with Auntie Jeannie over Christmas dinner. Maybe we and bankers should listen to Warren Buffett. He said, banking is very good business if you don't do anything dumb. Remember to have your own brolly ready when the bank wants its one back.
Like, comment and share.